in the end, I think we're seeing the aftermath kind of play out. Last week, again, just to reiterate, we had cooler than expected jobs numbers. The market cheered that on Friday, and then has proceeded to kind of follow through. We're taking a look at the NASDAQ as we speak. The NASDAQ is making a really impressive push higher here. This is going to be if we do get a green day today, that'll be our fourth consecutive green day after the recent pullback that we've seen in the market. It looks increasingly likely that a new bottom has been found, and that perhaps for now we're back in positive territory. So I want to talk about the NASDAQ. I want to talk about gold, a couple other charts that I want to pull up here today. Talk about the dollar, the VIX. We got a lot of stuff to talk about. But first, in terms of the NASDAQ, 17,800 was a pretty key level of resistance. We could see that this area previously was a real key level of support for buyers. And then when it broke, it completely slipped lower and lower, kept going down to this 17,100, which for now, really, I think we might even retested 17,000 on the dot. Bounced hard from there and have started to put in some higher lows and higher highs. So it seems like bulls are doing just fine here. Nice little push here for the NASDAQ. Can the win streak continue? To me, the likelihood is yes. Again, higher lows, higher highs, looking strong. From a price action standpoint, the S&P 500 also looking really good. Broke levels of resistance here. I would say good shot that even if you do get a pullback, buyers are going to come running. I could be wrong about that. This could just be, some sort of one extended lower high. But for now, again, it looks like the path is clear for more upside. However, I don't have any setups on the S&P, so I'm still a little bit cautious because there are some things that I don't love about the recent push higher. And if we take a look at indices specifically, let's go to the indices. Nope, that's the commodities. Let's go stock indices for a moment. So S&P 500, we're getting a neutral reading. So why the neutral reading if it looks so positive? Well, the trend is starting to look good, but there's still some things that were not so promising in my view. The economy cool down that we've seen, advanced GDP numbers came out lighter than expected. Services and manufacturing PMIs came in light. Jobs data, yes, came in light. And the market here, guys, is cheering this stuff. Are they right in cheering weakening economic data? That's the real question. That's where the debate lies. The quick answer, the short-term answer is yes. They are correct in cheering the light economic data. Why? Why is the market excited about less than expected GDP prints, cooler PMI data, jobs data coming in light? Why on earth would they be excited about that? The reason is because this will mean that interest rates are going to more likely to see a rate cut this year. Now, expectations for rate cuts. Remember, a rate cut is very stimulative to businesses and the consumer. Think about this. If everybody can go borrow money a little bit easier, everybody's going to go spend a little bit more money. Businesses are going to like that, right? Not only that, businesses that need to borrow money, if the Fed funds rate comes down, borrowing costs come down, and that is also advantageous to businesses. So why on earth is the Edge Finder giving it bearish readings? Well, because in the longer term, the question is the Fed truly going to be able to pull off a soft landing with all these rate hikes that have been baked into the system? Is this going to come out beautiful on the other side? I think there's a possibility, yes, but I actually like the idea of seeing inflation start to cool. We have not seen that yet. We're seeing inflation still sticky, but economic data coming in light. That's the issue. If you have inflation coming in light with this data, very exciting, because then this would counterbalance a lot of these score reads, by the way. If you got a +2 right here, that would shift the reading dramatically. But problematically, we have sticky inflation and we have cooling economic data. Okay, so that combination is the idea of stagflation. Now, Jerome Powell made a clear point that he does not see the stag or the deflation. However, just because he said that, he's going to say that. He's the Fed chairman. But if you put all your faith in the Fed, I'm telling you, that is a dangerous place to stay. The Fed has had many errors in the past, because who can blame them? Trying to control the economy is an incredibly difficult thing to control and to predict. So they're going to make mistakes. So the idea that they're just going to have a perfect soft landing, to me, is a little bit naive. The market is priced for it. You can see the market ripping here today, and I am long. So I'm not saying this like bitter as a bear. I'm not even a bear on the market. I'm just saying that before you get euphoric about this stuff, just remember that there's a possibility that we could see the economy really take a turn, and usually it overcorrects in one way or the other. If they think that the economy needs to cool down from this, everybody wants to see this before this, right? That's what they want the economy to look like. But likely what could also happen is that they do get the economy to start rolling over, but it rolls over a lot more than they wanted it to.
Did you know Trader Nick has a daily live show every Monday through Friday? Nick and our featured traders give their thoughts and analysis, and even share their trades live for you every morning. We cover news events live as well, watching markets spike and then giving analysis immediately following. If you want to join the live stream community, look out for our live stream schedule on the A1 Twitter account each week, or consider turning on notifications and never miss another news event.
Let's talk about the dollar here for a second. So the dollar index trying to hold support around 105, and it's doing a decent job. But I made this point. Why is the dollar holding steady here? Why isn't the dollar, dropping through this level here? If jobs data came in cool and economic data seems to be lightening up, it's because compared to the peers, right? The US's Western ally, central banks like Bank of Canada, Bank of England, the ECB, they are also looking like they are seeing their economies slow, and the economies of those places might cut rates sooner even. So the dollar in that case looks relatively still supported to a degree. I'd say if you're a dollar bear, watch for a breakout of this level. If you get a break of that, then okay, now you may see the dollar continue to correct lower. Somebody asked me, Nick, why does the Edge Finder have a bullish reading on the Euro USD? It's clear that the European economy will need to cut rates sooner. That seems to be the picture that's being painted. But remember, guys, it's all about forecasts and expectations. Everybody forecasted the dollar to just be indestructible and the economy to not crack at all. It's starting to show signs of cracking. And so that cracking is causing some repricing of the euro against the dollar. It doesn't mean that the euro is just outright the better economy. You have to be able to displace these. You have to be able to kind of parse through this stuff a little bit. The euro may just be seeing a corrective move. Doesn't mean it's going to trend up indefinitely. But right now, again, economic data out of the US starting to slide a little bit. And that's perhaps making a short-term bullish case for the euro. I actually think that that is a valid thought process. What I'd like to see on the DXY, as I mentioned, would be a break of that support level. But for me with the euro, you'd probably have to see a pullback to this level. I've got it marked up from yesterday's charts, 1.074. I like that area as a possible area to look for longs in the short term. This is not a long-term indefinite, I favor the euro. It's just, look, the economy out of the US might not have been as indestructible as everybody thought. Perhaps there's a short-term corrective move on that. That's the difference between trading and just long-term investing, right? If I was just long-term investing, if you ask me, do you think that the euro is going to be higher or lower in 2 years? My opinion would be lower. But as a trader, I'm not, buying and holding or I'm not holding on to a trade for 2 years very often, especially not in, if I'm going to trade FX, right? What do you think? What do you think about dollar yen? Will it go up further? I wish I had a crystal ball, I'd tell you, but I don't have a crystal ball. However, in my opinion, the yen still looks weak. However, if it does break this level, right? I've made this point. I'm not long, I'm not short, but if it breaks this level, perhaps the yen strength is real. Like perhaps intervention is a bigger thing, because at one point I made yesterday is this. You know, several times there's been little like blips where the market flash goes lower really quickly and then just gets bought up really hard. Right now we saw a big move lower that has not been bought up. You know, we haven't seen a V-shaped recovery. So if you take out this level, perhaps the intervention is a little bit more sticky, and with arguably some bear cases forming on the US dollar yen could be an interesting one to watch out for. But in my personal view, dollar yen is not like the one I'm going to trade. If I'm trading crosses, like if I'm trading FX, it's going to be the euro. But really, I trade currencies rarely compared to what I trade like the most, which is like gold and indices. I'm already long gold as sort of a proxy bearish move on the dollar, but not entirely. I just like gold also for a number of reasons. I'll show you the bullish reading that we're getting on the Edge Finder for gold. It's based on a number of things. The commitment of traders data. Let's look at COT data really quick. So I was saying that gold on the commitment of traders data looks half decent. Take a look at this. Gold is the biggest in terms of a long percentage proportion over the contracts traded on the CFTC's non-commercial commitment of traders report. Gold is the most heavily, proportionally wise, long on gold, long of the whole list that we track. On the flip side, the yen is the most bearish. Oil is also bullish, the Nikkei, silver. Now, this, I make this point often, but to reiterate for new friends who are watching the stream with me, this section of the COT data, the long-term positioning, changes very slowly, very gradually, and it's not incredibly useful for day traders and swing traders. Because, you know, if you've been watching me for a while and you know I watch the commitment of traders data for every week, this data, gold has been like a buy for like a year. So that doesn't tell you very much. However, what does tell you is how much is this changing week to week. Are they getting more bullish or are they getting more bearish? That's why we built this secondary table down below. So this table right here, guys, this is what traders probably want to pay more attention to. This shows you on a week to week filing basis, are they adding to longs? Are they adding to shorts? Are they decreasing longs? Are they decreasing shorts? This right here, this table that we built here, the latest weekly filing, that is going to be arguably the more important component of the COT data in my view. So, so check this out. If we're talking about gold for a moment, on a net percentage change, which you can find our calculation, we generated this column through a calculation. If you'd like to read about how that calculation works, head over to a1trading.com/edgefinder-tour, and you can read all about our system and how it scores everything top to bottom. Our full like algorithm, everything that we've got, it's pretty transparently written out there for you. So if you'd like some information about that, you can find it at a1trading.com/edgefinder-tour. Okay, so gold saw a modest 0.4% shift positive week over week. They decreased longs slightly and decreased shorts relatively aggressively. So think about that. Think about this as one person's positions. Let's say they're hedging and they have longs and shorts open on gold. If they decreased a lot of their short positions and decreased just a little bit of their long positions, is that net bullish or net bearish? It's net bullish, right? Pretty intuitive. So we built this table to help you spot that a little bit easier, because that's very hard to do in your head. On the flip side, you know, you had NASDAQ, SPX, the Dow Jones, silver, the pound. These are things that were more sold on a week over week basis. Okay, so like I said, I am long gold. Current positions for me. Let me see if I can get you guys caught up to speed here. So in terms of current positions, pull this up here. There it is. Okay, current positions. I am long gold, as I mentioned. So there's the gold position. I have a long position on XLK, which is a ETF or a collection of stocks that are focused in the technology sector. So I've got a good sized position on that. That's been going pretty well. At the same time, we do also have VOO. This is just the S&P 500. So I have S&P longs, I have technology longs, I have solar panel ETF longs, which, wait a second, that TAN, what's going on with TAN? Hold on, I gotta check my TAN in just a moment. I have some shares in PayPal and Starbucks. I bought those recently. And TLT, my covered call position here, still in the red, but it's come back from the dead here. I mean, that trade was down like $4,000 at one point, so it's come back a good bit. Let's take a look at TAN. So I have two different strategies, by the way. You might be wondering, like, what's all the option stuff? I have two strategies. My momentum trading strategy, which you guys are probably most familiar with on my YouTube channel or on my Twitter, where I'm, basically using simple price action, fundamentals, trailing stops. And then I have an option strategy, still fundamentals, but more mean reversion based. So I entered TAN. I sold puts. I got assigned on those shares. So now I have a long position on TAN. What is TAN? It's a solar ETF. So these are companies that specialize in solar technology. It's an area of the market that I think has a lot of potential growth. It's high risk, but it's also high reward. So I built out a very small position and I sold covered calls on my position. And so this is my current P&L on this, $842 on this trade. And I sold calls at $44 as my strike price. So if we keep moving higher, I'll basically take profits on this trade. So a bit of a mean reversion trade. What I mean by that is I use simple Bollinger Bands, oversold. Again, simple technicals, looking for oversold or overbought conditions to sell puts or covered calls. So the wheel strategy, but sort of an active trading wheel strategy. So yeah, there's current positions. TLT is another one. Really quick, I'll just do this. By the way, if you guys would like to check out this broker that I'm using right now, we'll drop the link to WeBull. It's a great brokerage if you're looking to that. I think if you're on Twitter, that should also be linked below. Yes, I think so. Yep. WeBull is linked in the pinned comment of the live stream if you're interested in checking it out. It's a really great platform. These are referral links, by the way, full transparency. If you choose to use one of my referral links here, you will be supporting our work. You don't have to. You can just sign up with WeBull without using my link. But if you want to support my page, I do appreciate it. So yes, that is some current positions. Let's talk a little bit more about the momentum side of things. Question is the NASDAQ going to persist? I really thought, and I could have been wrong about that. I could be very wrong about this. I thought that there would be a little bit more strife to this rally, and it surprised me. So I have a convoluted view of the stock market right now. I am bullish, but not incredibly bullish. I'm modestly bullish. And so if I'm modestly bullish, I mentioned when we saw this big sell-off that I was buying. Again, I showed you my positions. I bought the S&P 500 VOO, right? I bought VOO. I bought XLK, which is a technology sector. So I have long positions that I built into this sell-off, which are looking great. But I didn't get full exposure to the market. So I'm not 100% invested. I don't have all my, full, margin on the the long side. But I mentioned that I thought we might see a possible further dip, in which case I could actually build a bigger position on stuff. So I held in my stock brokerage that I keep showing you, the cash side, I stayed a little heavy. And so I'm kind of regretting that, obviously, in hindsight, shoulda, coulda, woulda, just gone full in right there. But nobody knows where the bottom of a pullback is. But I was wrong and right at the same time with this move. I was wrong because I thought we would see more of a pullback. But I was right because when push comes to shove, I bought some of this dip. So I bought the dip, but I would have liked to have been able to buy more of it. That's where I'm at. The reason I didn't buy more of it was because I thought, there's some valid concerns inflation data is sticky. The economy is, slowing. And so I still think that there may be some choppiness ahead. And I talked about that with Chris Pulver yesterday on the stream. Talked a little bit about how you may get some further choppiness. It may not be a straight shot, through the highs, but if it is what it is. I'll just make the profits on the positions that I have. But again, I would ideally love to see a bit of more of a corrective pullback. If it happens, I may be able to get more positioning. Hopefully that makes sense. I know it's a little convoluted.
Anybody else ever felt like the chart is talking to them like this?
Exactly. The chart feels like it's talking to me. RTY, this is the Russell. Russell, I did take a loss on this one, and I'm glad I took it when I did. I've had a couple of these recently. A couple times where my stop loss ended up being, like the best thing that could have happened to me, because again, had I held on to this short position, it now would have been, much, much worse. I closed out pretty quick, took a loss on it. I also took a loss recently on silver, which is a little frustrating because I took this loss like right here. So that one did not look so hot, but took a loss on silver. It's okay though. I'm in a okay position so far on gold. I have those, like I said, the long positions on the stock market that are looking pretty good. The options plays are doing okay. Here's another one recently that really I was thankful for the stop loss approach, because I had a long position over here. I thought that, with all the tension in the Middle East, with the strong economic data out of the US, that we could see a continued push on oil. Now, let me cushion myself here a little bit. I caught this move here. I made some pretty good money on oil so far in 2024. But then when it fell apart, the stop loss ended up being the best thing that I could have done here. I took a stop as we broke this low. So I did take a loss. I think I can't remember how much I lost, but I lost on that trade, and it ended up being one of the better decisions because the market proceeded to drop much lower. In fact,
I love trailing stops.
So 80, yeah, exactly. So 81 broke this level. Big breakout at 81 here lower. And so when it broke that, that to me is just like, okay, I'm staying out of the way of oil. It's no longer on the top setups for the Edge Finder, so I don't have any positions on that. And I'm just going to continue to watch that. Some of the yen pairs might be interesting too. We do see some of those looking, bearish on the setups terminal here. Euro pound, euro dollar, gold.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.